I guess Greece, it says it won the battle, but not the war. How is this war going to end, in your view?
Good morning, Angie. Thank you for having me. Greece is unlikely to exit in the background of QE. So that's the background we should remember. So we still got another 10 months this year and another 9 months next year of continued bond buying by the European Central Bank. It's going to be a roller coaster ride. We have the new deal. It will be taken to all the parliaments of the EU member states. They all have to approve, theoretically. So the market is very bipolar. It's reacting to every news. The Greek banks have been up 10% one day, down 10% another day, every day over the last month. But the broad context is that Greece is likely to stay in the European Union, and there is a solution to this. And as we expected, we saw the Greek parliament or the Greek ruling party move more to the center. So that was kind of what I expected, and that's what has happened here.
Well, as you said, I mean, investors are really reacting to the smallest bit of news, even guidance, even Twitter, tweets coming out from Varoufakis and the rest. What do you think they're going to react to specifically this week? And not necessarily Greece, but just what do you see on the horizon this week that could be moving markets?
In general, this will strengthen the euro. European markets will react very well. QE is generally very supportive for asset prices. So we saw QE leading to higher prices in the US and in Japan. We will see EU join that party. So we will see continued asset price increases across the European stock markets over the next several months. Of course, this is not something everybody should follow. This is just repricing based on monetary easing. Looking around the world, I think the US is the most productive economy, and it is actually showing the most signs of growth. And being in US dollar assets is probably a good thing to do this year. I'm spending a lot of time on Brazil. Brazilian currency is at a 10-year low. There's actually no good news in sight. So Brazil seems very interesting to me because of various aspects.
Okay, in terms of stocks, fixed incomes, derivatives, what's a good strategy to play right now? What would you keep and what would you sell?
Okay, in general, I like to go into areas where there is a good chance of a depressed seller. So there is a credit crunch in energy stocks. Energy bonds are credit crunched. So we are seeing banks likely to pull back. And this actually leads to a production response from the oil companies. The companies which have hedges in place continue to produce a lot of oil because there is no reason for them to cut back. The companies which do not have good hedges, they will overproduce in the first half of this year because they are trying to make sure that they can keep the bankers at bay and keep the bondholders happy. So spending a lot of time on credit in energy is a good use of time. Then other places where there are crises we have seen Brazil having good opportunities, both in equities and in bonds. And the currency is at a 10-year low. GDP is likely to be negative this year. And we are seeing inflation is at 7%, and the 10-year bond yields are at 4.7. So you again have negative yields in Brazil, negative real yields for investors. So this is very interesting. It reminds me of India 2-3 years back when everything looked bleak and you have to kind of wait for the turnaround. So these are some of the interesting areas right now.
And we are, in fact, you mentioned India. We are seeing a turnaround right now. In terms of other emerging markets, do you think at least you'll see more strength than what the challenges are facing Brazil right now?
We have seen emerging market currencies actually weaken over the last several months. US dollar strength is the theme the market is going towards. We know that real economic growth is coming from a lot of emerging markets. So we will continue to see growth in the real economies of India and China, underpinning growth for 2015. But in terms of market prices, the markets move a lot on sentiment, so it's hard to say which markets will move up. India is a strong economy. It's showing the right signs, but the markets are expensive. The sovereign bond play is interesting. That's something, I've had a personal position in Indian sovereign bonds for 3 years.
Yeah.
I've been waiting for a long time. And now it is re-rating. And of course, there is expectation that there'll be a couple of more rate cuts. I mean, we are in the start of the easing cycle, so we'll probably see some more improvement in Indian sovereign prices. But of course, it's not a multi-year theme. It's just a tactical position you could take.